Hello and welcome to a special edition of the Property Pod, your weekly insight into the ever-changing world of property, mortgages, and finance. This episode is proudly sponsored by the Finance Family, a growing financial services business that believes in keeping things simple, clear, and customer-focused. If you're after proper, no-nonsense advice, whether that's about mortgages, protection, or planning for the future, the Finance Family are the team you want in your corner. Now, as we approach the tail end of 2025, the mortgage and housing market remains a fascinating mix of stability and uncertainty. Rates are still relatively high, inflation is easing but stubborn, and the regulatory environment is shifting beneath the surface. So, in this special episode, we're taking a step back to look at the big picture, what customers, lenders, and brokers should really be focusing on right now, what the key risks are, and what might lie ahead in the coming months. Let's start with the group most directly affected, customers. Well, if you're a homeowner or a buyer in this current climate, a bit of careful planning, it can really make all the difference. First and foremost, you've got to stress test your mortgage payments. Ask yourself, honestly, if rates went up by, say, 0.5% or even a whole percent, could I still comfortably afford those monthly repayments? It's the kind that CHEP lenders already do behind the scenes, but it's just as important for you to do it yourself, especially if you're on a tracker or approaching the end of a fixed-rate deal. Secondly, understand your deposit and loan-to-value ratio, your LTV. The bigger your deposit, the lower your LTV, and the more competitive the rate you're likely to get. According to Uswitch, borrowers with deposits of 25% or more are often securing rates noticeably lower than those at 90% LTV and above. Then there's protection, and this one truly should not be overlooked. Ask yourself honestly, if I lost my income, became ill, or worse, what would happen to my home, and more importantly, my family? Life cover, income protection, and critical illness insurance are all part of the broader mortgage journey. It's not just about getting the loan, it's about keeping it sustainable, whatever happens in life. And if your fixed rate deal is due to end soon, please start planning early. Don't wait until the last minute. Talk to your broker 6 months in advance. You'll have more options and can lock in a new deal before rates change. Finally, just a word of caution. Don't assume house prices only ever go up. Because, well, they don't always, do they? With affordability stretched and demand softening, some areas could see slower price growth or even small declines. Now, that doesn't mean disaster. It just means we're in a more balanced market where careful budgeting matters more than ever. For lenders, it's a time to tread carefully, but also creatively. Maintaining rigorous affordability testing is crucial, especially with such an uncertain macro backdrop. The Bank of England base rate may have leveled off for now, but inflation's still hovering around that 3.8% mark. And, well, no one's ruling out further fluctuations. Lenders need to be monitoring borrower risk closely, not just credit scores, but employment sectors, payment shocks, and the broader economy. A small rise in unemployment, for instance, could have a ripple effect on arrears and defaults. It's almost enough to make you wish for the good old days, when a simple handshake was all you needed, before the inevitable collapse, of course. Innovation is also key. We're seeing growth in equity release, alternative lending, and niche product structures, but that comes with its own set of risks. Every new product needs to be matched with strong risk controls and clear customer understanding. And finally, lenders need to be ready for regulatory change. With the PRA exploring ways to boost competition and the Consumer Duty still bedding in, the compliance landscape is shifting fast. Capital requirements, affordability frameworks, and consumer outcome reporting will all keep evolving through 2026, and lenders who get ahead of those changes will have the edge. Now, let's talk about the heroes of the middle, the brokers. Brokers are the bridge between complex market mechanics and real human decisions. And right now, their role has never been more vital. Offering whole-of-market coverage is increasingly important. Customers need confidence that they're getting a truly comprehensive view of what's out there, not just a small slice. Education, too, is part of the broker's value, especially when it comes to protection. With the risks around affordability, job security, and health all on the rise, protection conversations can't be an afterthought. Oh no, they're a core part of delivering good customer outcomes under the Consumer Duty. Brokers also need to stay ahead of the curve when it comes to regulation and product innovation. New insurtech solutions, later life lending, and flexible mortgage models are changing the landscape, and clients expect their advisor to be informed, not playing catch-up. And finally, brokers can add huge value by helping clients think long-term, not just about getting on the ladder, but about staying on it. Sustainability, resilience, and forward planning will be the themes of the next few years. So, where are the biggest risks right now? First, there's refixing risk. As older, cheaper deals come to an end, thousands of borrowers are having to refinance into much higher rates. For some, it's a jump from 1.8% to over 4.5%, and that payment shock, well, that can be significant. Then there's employment and income risk. If the job market softens, even a modest increase in redundancy rates could put stress on household finances. We've also got regulatory risk, ongoing changes to affordability rules, capital buffers, and the Consumer Duty could reshape underwriting standards and product design. Another major one is protection shortfall risk. Too many borrowers still lack the right cover, which leaves them exposed if illness or income loss strikes. And finally, house price risk. If rates remain elevated, house price growth could stagnate, which in turn affects loan-to-values and even opens up the risk of negative equity in certain high LTV segments. For lenders, there's also competition compression. With tighter margins, some may pull products, making the market even more competitive and selective. Looking ahead, many analysts expect only modest downward movements in rates through 2026, and that's if inflation continues to fall and the Bank of England starts signaling rate cuts. Inflation at around 3.8% gives a little room for optimism, but there's still a lot of global uncertainty. Energy prices, supply chains, and fiscal policy all have a say in how quickly rates actually move. According to UK Finance, overall lending volumes are likely to remain subdued in 2025 and early 2026, with borrowers taking a cautious approach and lenders maintaining tighter affordability criteria. On the positive side, protection demand is set to grow. Awareness around income and health risks has increased, and both brokers and insurers are seeing a rise in clients wanting proper cover. And, as we mentioned earlier, the regulatory environment is likely to become more complex, but also more open to competition. That could mean more specialist lenders and new entrants, which in turn gives brokers and customers greater choice, but raises the bar for compliance and understanding. Otherwise, we might all end up in a financial black hole. And who wants that? So, as we stand at the crossroads of change, here's the real takeaway. The winners, whether customers, lenders, or brokers, will be those who plan ahead, stay informed, and remain flexible. We're in a market where resilience matters just as much as rate. It's about building financial plans that can withstand a few bumps in the road and being proactive, not reactive, when conditions change. And that's where advice, good, honest, human advice, comes in. So, if you're listening and wondering where you stand, maybe your deal's ending soon, or you're considering new protection cover, reach out to the finance family. Their down-to-earth, customer-first approach means you'll get the clarity and confidence you need to make smart, informed choices. That's all for this special edition of the Property Pod. Thanks for joining me for a deeper dive into what's shaping the mortgage world right now. Until next time, stay informed, stay steady, and remember, the key to navigating uncertainty is preparation. Thank you for listening to this special edition episode on the Property Pod, brought to you by the Finance Family.